Monday, December 29, 2025, seemed like just another quiet day for the FTSE 100. At first glance, the market appeared to be in a state of calm, with little to suggest anything out of the ordinary was happening. With many traders on holiday, trading was thin and the main index barely moved. The atmosphere on the trading floor was subdued, with empty desks and festive decorations hinting at the season. The usual buzz of activity was replaced by a quiet lull, as if the market itself was taking a breath. But beneath the calm, a dramatic story was unfolding, one driven by global politics and hopes for peace in Ukraine. Headlines from around the world flashed across screens, reminding investors that even on a slow day, the world's events never truly pause. The FTSE 100, a snapshot of the UK's largest companies, looked flat overall, but key sectors were on a roller coaster. While the index as a whole seemed steady, the reality for individual companies was far more turbulent. Defense stocks, which had soared amid conflict, suddenly dropped, reacting sharply to the latest news. Investors who had previously bet on continued instability were now rethinking their positions as the possibility of peace grew stronger. Meanwhile, mining shares also faced pressure. Falling commodity prices and uncertainty about global demand weighed heavily on the sector, adding to the day's underlying tension. Thin trading amplified these moves, making the day more volatile than it appeared. With fewer buyers and sellers in the market, even small trades could cause outsized swings in prices, creating an illusion of calm that masked real instability. The FTSE 250, focused on UK mid-caps, actually rose, but the giants of the FTSE 100 were being pulled in opposite directions. This divergence highlighted the complexity of the market, where not all companies move in sync, and where different forces can shape the fate of different sectors. This tug-of-war masked the real drama for some of Britain's most important industries. For sectors like defense and mining, the stakes were high, and the day's movements hinted at deeper shifts that could play out in the weeks and months ahead. The FTSE 100 isn't just a number, it's tied to the savings and pensions of millions. Every rise and fall in the index can have a direct impact on people's futures, from retirees checking their statements to young professionals planning for tomorrow. When defense stocks tumble on peace hopes, and mining stocks fall as commodity prices cool, it's a real-time report on how investors interpret world events. The market becomes a living reflection of global hopes, fears, and shifting priorities. December 29th was less about numbers, and more about the push and pull between global conflict and capital. Even on a day that seemed quiet, the FTSE 100 told a story of uncertainty, resilience, and the ever-present influence of world events on our financial lives. The day's biggest story was the sharp and unexpected drop in defense company shares across Europe, catching many investors off guard and sending ripples through the financial world. This sudden downturn wasn't triggered by disappointing earnings or negative company news, but rather by a glimmer of hope for peace in Ukraine. A hope that, for once, overshadowed the usual market drivers. News of promising diplomatic talks between President Trump and President Zelensky sent shockwaves through the markets, as investors scrambled to reassess the future of the defense sector in light of these developments. For defense investors, the prospect of peace means fewer government contracts, reduced military spending, and ultimately, lower profits for companies that have long relied on conflict-driven demand. Companies like BAE Systems, Rolls-Royce, and Babcock International, which had thrived during periods of heightened tension and conflict, suddenly looked far less attractive to investors seeking growth. Investors rushed to sell their shares, causing the FTSE Aerospace and Defense Index to fall by 1.1% in a matter of hours, a significant move for such a large sector. The market operates on expectations, not morality. So while peace is good news for the world, it can be bad news for an industry's bottom line, as future profits suddenly look less certain. The drop wasn't a judgment on the companies themselves, but a reaction to a potential shift in the global landscape, where the need for new weapons and military technology could diminish. The mere possibility of peace erased millions from the market value of Europe's largest defense contractors, highlighting just how sensitive these stocks are to geopolitical news. It was a stark reminder of how tightly these companies' fortunes are tied to ongoing conflict, and how even a hint of peace can send shockwaves through the entire industry, changing fortunes overnight. The optimism in the markets vanished almost as quickly as it appeared, leaving traders and investors scrambling to make sense of the sudden shift. Just hours earlier, there had been a surge of hope that a peace deal in Ukraine might be within reach, sparking a wave of buying and a sense of relief across global markets. But those hopes were dashed by a dramatic report from Moscow, which accused Ukraine of launching an attack on President Putin's residence, a claim that immediately dominated headlines and news cycles worldwide. This accusation didn't just escalate tensions, it threw a wrench into ongoing diplomatic efforts, reversing the morning's positive momentum and leaving negotiators at a standstill. Defense stocks, which had dropped on the initial peace hopes, quickly stabilized and even recovered some of their earlier losses, as the reality of continued conflict set in. The logic for investors flipped almost instantly. If peace was off the table, then the demand for military hardware and defense services would remain strong, if not increase. The market's brief panic about a so-called peace dividend faded, replaced by the sobering reality that the war was far from over, and that uncertainty would continue to drive volatility. This rapid swing in sentiment showed just how volatile and reactive markets can become when geopolitics are in play, with every headline capable of moving billions of dollars in value. Investors are constantly trying to price in the future, but in a conflict as fluid and unpredictable as Ukraine, that future can change in a matter of hours or even minutes. The day's rollercoaster in the markets was a microcosm of the broader uncertainty. One moment, hope for peace. The next, a swift return to caution and risk aversion. The incident served as a stark reminder that the road to peace is rarely straight or predictable, and that setbacks can come suddenly and without warning. For investors, betting on a specific outcome is always risky. Sentiment can shatter with a single headline, and fortunes can change in the blink of an eye. Defense wasn't the only sector under pressure. Mining shares also took a hit. The FTSE 100, heavy with mining giants, felt the impact as commodity prices dropped. Gold and silver, usually safe havens, dipped, hurting companies like Endeavour Mining, whose shares fell 4%. Industrial metals like copper also retreated from record highs, pulling down giants like Glencore and Rio Tinto. High prices had fueled a rally, but now some buyers were priced out and investors took profits. The Industrial Metal Miners Index fell by 0.3%. Mining stocks are sensitive to global economic health and supply-demand shifts. A drop in commodity prices signals expectations of slower growth and less demand for raw materials. For the FTSE 100, weakness in mining has a major impact on the overall index. The day showed how global economics and investor sentiment can move entire sectors. Looking at individual companies reveals the day's real forces. Babcock International, tied to defense services, fell 3.4% on peace fears. Rolls-Royce, with its key defense aerospace division, dropped 1.1%. BAE Systems, a global defense contractor, slipped 0.8%. These declines drove the FTSE Aerospace and Defense Index lower. But there were winners too. International Personal Finance, IPF, soared nearly 6% after a takeover deal was announced. Takeover news often boosts a stock, as the acquisition price is set above market value. IPF's surge helped offset losses elsewhere, showing how company-specific news can buck broader trends. Even on a day dominated by global events, individual stories still matter. The market is a mosaic of big and small stories, all happening at once. To understand the day, you have to look at the year as a whole. Despite the dip in defense and mining, the FTSE 100 surged nearly 21% in 2025. This marks its fifth straight year of gains, driven by booming defense, mining, and banking sectors. Geopolitical tensions fueled defense stocks, while global recovery and green energy demand boosted mining. Banks also thrived as rising interest rates increased lending profits. The FTSE's unique mix of global giants was perfectly positioned for this year's environment. The end-of-year dip is just a small correction after incredible growth. 2025 was a year where old economy sectors made a powerful comeback. The FTSE 100's 21% gain stands out globally. London's index outperformed both European and American peers in 2025. The Pan-European Stoxx 600 rose 16%, but lagged behind the FTSE's surge. The FTSE's heavy weighting in commodities and defense gave it an edge. The S&P 500, long led by tech giants, gained around 17%. But higher interest rates and uncertainty favored companies making profits now. like those in the FTSE. This outperformance attracts global capital, strengthening the pound and the UK economy. The FTSE's success showed that traditional sectors can lead in turbulent times. In a year of change, London's old-fashioned market proved its value. Investors found what they needed in the FTSE's established giants. The time of year played a big role in the market's behavior. The final week of December is one of the quietest for financial markets, with many professionals on holiday. Low trading volume means even small news can cause big swings. This is what happened with defense stocks. Peace talk news hit harder in a thin market. The London Stock Exchange closes early for New Year's Eve and remains shut for the holiday. Most institutional investors have locked in their results for the year, waiting for January to make new moves. In this lull, any news can have an outsized impact, but price moves may not reflect true value. The FTSE 100 story is a reminder that the stock market is deeply connected to real life. Events like peace talks or commodity swings ripple through the financial system, affecting the value of companies we all own through pensions and investments. When defense or mining shares fall, so can our savings. The market constantly bets on the future. Good news for the world can mean bad news for certain stocks. Understanding these connections empowers us to see how global events impact our wallets. The market's daily moves reflect the world's ongoing story: conflict, resolution, fear, and optimism. By watching how markets react, we gain insight into the web connecting global events to our own finances. The FTSE's quiet day was anything but simple. It was a window into the world's pulse.